Introduce myself. I am Vicky Nunes. As one of the SCF co-facilitators on the biennial assessment, I'll just give a short introduction on this issue. My fellow co-facilitator, the Ambassador Saini Nafu from Mali, unfortunately could not be attending this webinar, but he promised to be very active during the next ones. So that will be a good thing to know as well. As I mentioned, this webinar is the first one, but we will have two more in a series of outreach to all stakeholders. And we are expecting around 75 participants, but just to make sure that we don't lose any time and making sure that we have sufficient time for discussion, I'm just going to start the introduction already, as for now, because all of you made it on time. So, of course, it's all in the context of the SCF biennial assessment and overview of climate finance flows. So first of all, let's have a look at the agenda of today. Thank you. So, as I said, a very brief introduction by me. On behalf of the two co-facilitators. Then Dr. Shaleen Watson will give a short overview of the fourth biennial assessment and areas for input. And this will be followed by by several presentations by the people we see on the screen. We're very pleased to have about 6 presentations given by 7 persons. I mean, this is quite ambitious, so I'm sure that they will provide a good update, but hopefully brief, so that we can actually have a discussion as well. So I am aiming really to have 30-minute discussion to ensure that everybody has a say on this. So first, some housekeeping matters. Yeah. So just, I mean, I think many of us already are quite advanced in using digital webinars as we are having it today, but just to make sure that we ask you to only use audio and keep your microphones on mute to assist with connectivity for all participants. If you are having the floor, please put on your camera because it's still useful to see somebody speaking while listening to it. We also ask you not to share any screen or files during this call. And if you wish to make an intervention during the discussion time, we kindly ask you to raise your hand, which you can find above your screen, at the top of your screen, if you're on a computer anyway. You can also type your name into the chat, but I personally prefer raising the hands function if possible. We will be recording this informal webinar, just because it does facilitate the development of the report, and we hope there are no objections doing so. I mean, the whole webinar, as the other two, are for informal and interactive, so this will be very helpful to ensure that we actually compile all the inputs and gather insights during this webinar. So I hope that will be fine by you. So these are the housekeeping matters. I mean, yeah. So then we go just to give you some global background in case this is still something that's necessary. I mean, maybe I'm doing this for too long already. So the SCF is a constituted body under the Convention and the Paris Agreement, which assists both the COP and the CMA on serving, which both serves on climate finance matters. The SCF receives this mandate to prepare the biennial assessment every 2 years, that started at COP17 in 2011. And this report, the fourth biennial assessment, will actually inform COP26, and it will be made available in 2021 ahead of the COP. Exact dates still to be followed as soon as we can. So, on the chapters, on the biennial assessment itself, you might, I mean, as in previous reports, we have 3 different chapters. So first, 3, I mean, and this time we also have a 4th one. So the chapter 1, which is considering the methodological issues related to transparency of climate finance. Then chapter 2, will provide this overview of climate finance flows. 2016-2018 is what will be featured in the 2020 biennial assessment, and also include information on identified trends from previous years. And then the third chapter will is the assessment of the climate finance, considering the implications of their purpose, composition, effectiveness, access, and again, emerging trends relevant in the context of the UNFCCC. And for the first time, we will have a fourth chapter, which is about mapping the information relevant to Article 2.1c, including its reference to Article 9 thereof. So, as I mentioned already before, we aim to publish this biennial assessment by mid-21 to inform COP26. So where do we stand at this point with the development of this biennial assessment? Is that just to, so we can turn into the topic right now, which is, we had this call for evidence, and we do want to thank all the information that we already received for this. And of course, this webinar will also help to share the perspectives, data, and information on improvements in reporting climate finance impacts, outcomes, and results. So this, these webinars are really also to make sure that we do follow up on the recommendations coming from the last BA. A lot of work is going into those reports, and it does make sense that we also make sure that we actually follow up. So I'm really happy that we have those webinars now. The call for evidence is still available on the UNFCCC website, as well as the responses received to date, which can be found on the information repository of the SCF website. Again, thanks all for really providing us with a lot of data, a lot of information. This is really important to make sure that we have a fully fledged biennial assessment. So this is my very brief introduction. I think we have a lot of more participants at this stage, which is great. And so without further ado, I do want to give the floor to Dr. Charlene Watson. She will be introducing the topics as they are being treated in a biennial assessment, and also the specific areas for input for this specific webinar. Dr. Watson, you have the floor.
Thank you so much, Vicky, and it's great to be here today. So thank you very much for the invitation to speak. My name is Charlene Watson. I'm a research associate at ODI, and I'm also part of the technical team that worked on the 2018 biennial assessment and overview of climate finance flows. And I'm also currently working on the BA 2020, so the current edition, or the fourth edition of the biennial assessment. So on the next slide, please. Many of the topics that we'd like to discuss today fall under the umbrella of the third chapter of the biennial assessment, and that's what's called the assessment chapter. So the chapter itself, the outline is presented on the screen. It really focuses first on a subset of climate finance. It focuses on international public concessional finance flows. And what that means is it captures biennial reports, and then it's supplemented by OECD DAC creditor reporting system data, particularly looking at the bilateral climate finance flows. It then looks at the flows from the major multilateral climate change funds, and then finally from multilateral development banks. And using that subset, it considers the thematic split, how much for adaptation versus mitigation. It considers also the geographic split, looking at the different regions it goes to, as well as SIDS and LDCs. And then it considers the financial instruments that are being used through these channels, before it goes on to try to consider some of the aspects of effective climate finance. A lot of the effectiveness section focuses on the multilateral climate change funds, where we find there's most data availability. But in doing so, it looks at access, such as through the implementing entities. It looks at the pace, it looks at the cost of the flows through the climate funds, and then it tries to look at ownership through aspects of alignment where possible, as well as the national institutions that are emerging for tracking and programming climate finance. And then the final piece of that effectiveness section tries to look at the impacts of climate finance, which hopefully we'll get into a bit more detail today. Just to note that the second part of chapter 3 then goes into a little bit more depth of these climate finance flows in context. So it considers wider international public finance flows, wider official development assistance, other official flows, and also South-South cooperation, before looking a little bit more about drivers of climate finance and various considerations to be made for the consistency of finance flows with low emission climate resilient development pathways. Next slide, please. So as we prepare the fourth biennial assessment, it's worth reflecting on some of the recommendations that are relevant for Chapter 3 that the SCF made to the COP in the 2018 BA. So it's really hoped that through this webinar, we actually gain insights that we can include in the new iteration of the BA that can show how progress isn't being made across these 5 areas. So the first, we're going to go through 5 recommendations. The first 2 have strong links to the impact of climate finance. The first one you can see on the screen refers to reporting on impacts of climate finance. This was recommendation N. So this reflects that we need effective climate finance and not just climate finance or more climate finance. It's really important to make sure that it's having an impact. In the previous biennial assessments, we see that progress has been made. For example, we're able to monitor developments in the results frameworks of multilateral climate change funds through metrics for mitigation that might be focused on emissions or megawatt hours of increased air capacity, hectares of forest that are saved, for example. Yet we can also see that our measures of impact for adaptation remain challenging to allow meaningful comparison of what really works and what works less well. So the focus for adaptation metrics has often been on direct and indirect beneficiaries being made more resilient, which is something that, as many of you will know, is something that's very highly context specific, which makes this comparison difficult. And then even for mitigation, the question remains whether the amount of greenhouse gas emissions as an impact measure is really a sufficient metric in the context of wider adoption of net zero goals. And finally, for this recommendation, with the need for transformative change more present than ever, the speed at which we need to undertake climate action is very clear. We need to focus on articulating a measure transformation. How might we do that both within and outside of the multilateral climate change funds? Next slide, please. The next recommendation is much more focused on climate proofing and climate resilience measures in climate finance. This was recommendation O. So building on the previous recommendation, it focuses on the need to improve the causal linkages between climate finance and its impacts on resilience building, but also more broadly ensuring that development finance is taking into account climate risk. So the 2018 biennial assessment reviewed the initial concepts emerging from the MDBs to identify climate resilience benefits, but at the time this work was at an early stage. So some of the key things you want to get at is adaptation and resilience being made, is this funding being made available in line with best available science, and what does best practice look like? And how are the key performance indicators being made available to reflect this? And perhaps what might be relevant now is how does the experience of COVID and the pandemic affect our understanding of resilience in a climate context, perhaps, for example, with respect to health sectors? A topic in and of itself, but also one that manifests across many areas of the biennial assessment, is gender and climate finance, which you can also see on your screen, which was recommendation N. So the encouragement for providers to improve tracking and reporting on gender-related aspects reflects that while there's a growing understanding of the need for gender-responsive governance, such as representation at board level, or programming, taking into account the differential effect of climate change impact on different genders, as well as the impact of climate finance. So, for example, gender disaggregated impact measurement. Best practice is emerging rather slowly. The 2018 biennial assessment reviewed the adoption of gender action plans and policies across the climate finance community, and particularly in the multilateral climate change funds under the UNFCCC, as well as surveying the available data on gender and climate finance. But it was clear that there remained some gaps in understanding, for example, in how to undertake gender responsive budgeting for accessing and programming climate finance. So on the next slide, please, the 2 final recommendations being addressed today focus more on tracking climate finance and its impacts. So the first is on domestic level institutional capacities. This reflects the understanding that the engagement of national level institutions in accessing and program climate finance can build country ownership and better alignment of climate finance with country priorities, but also that greater transparency allows better measurement and so understanding of the effectiveness of climate finance flows. The 2018 biennial assessment dealt with this by trying to pick a handful of country case studies where there had been progress. And this recommendation is therefore focused specifically on within recipient country institutions. While you'll see the next recommendation, the country level reporting recommendation G, focuses more on increasing data availability and transparency on the contributor side of finance flows, understanding in more detail where climate finance is going, and taking us a step closer to understanding if it's aligning with recipient country priorities, as well as encouraging, full circle back to the first recommendation, whether we can have stronger impact measurements, for example, in priority subsectors for climate change, mitigation and adaptation. So I'll stop there with respect to the introduction, and I look forward to a very interesting conversation and hopefully be able to integrate some of the thoughts coming out of today in the 2020 biennial assessment. Thank you very much.
Well, it's from 20 to 22nd.
Thank you, Dr. Watson. I think that's already giving a nice overview on all the different issues. So just before giving the floor to the different speakers or discussants today, I just want to make sure that we also know the context of this SCFBA recommendations, because as many of you know, probably the biennial assessment has two parts. I mean, we have the technical report, which is written and provided by the technical experts as Dr. Watson. But then we also have these recommendations, which are actually prepared by the SCF itself and also then presented to the COP and then, of course, now also the CMA. So these are actually reflecting the key findings which the SCF members wanted to highlight, of course, on the basis of the substantial report done by our great consultants on this issue. So I'm going to give the floor now to the different speakers, starting with Ms. Liane Jelatek from the Heinrich Böll Foundation, and followed then by yes, the other colleagues. So first of all, Liane, you have the floor. Go ahead. Thank you.
Yes, thank you very much, Vicky. Thank you also to the introduction by Charlene. I appreciate very much the opportunity to be here. I was asked to reflect a little bit on what was recommendation M, gender and climate finance, encourage climate finance providers to improve tracking and reporting on gender-related aspects of climate finance, impact measuring and mainstreaming. Can I have slide 1, please? And next one, please. So since the Cancun Agreement, there has been an acknowledgement in the UNFCCC proceedings that gender equality and the effective participation of women are important of all aspects of any response to climate change. Gender responsive climate financing is needed. It's a matter of using scarce public funding in an equitable, efficient and effective way. It also acknowledges that climate finance decisions are not made within a normative vacuum, but must be guided by the acknowledgement of women's rights as human rights. And while there have been quite some advances in existing climate funds in integrating gender, further action is needed, particularly also addressing not only the way how climate funds implement their gender mandate, but also particularly what they are funding. Next slide, please. Next slide, please. As Charlene has indicated, the third BA Thank you. The third BA looked for the first time more seriously into some of the gender methodological issues by tracking the gender intent and purpose of climate flows via the OECD DAC and how it overlaps between the gender equality markers and the RIA markers for ODA, and also looking at some of the existing mandates and frameworks for dedicated climate funds. For the 2017-2018, I think analyzing this overlap between RIA markers and gender equality markers is still instructive, especially also in the absence of data on gender being included in the biennial reports developed countries submit to the UNFCCC. Next slide, please. The forthcoming shadow report on climate finance by Oxfam for 2017-2018 flow, for example, shows that only an estimated 1.5% of climate-related ODA identified gender equality as a primary objective, and 34% identified gender equality as an important but not principal objective, with the remaining 64% of projects either determining that gender equality is not a significant objective or not screening it at all. But relying on the OECD DAC for reporting is insufficient, as at best the OECD is an imprecise, more qualitative than quantitative assessment of what progress we've made, and also many multilateral organizations who are not required to report on the gender markers actually don't. So important additional efforts are needed, including for the fourth BA, which could include references to gender more broadly. For example, it should reference and highlight the requirement and need for gender disaggregated data every time a reference is made to the beneficiaries of climate finance for both adaptation and mitigation. And we've heard that the number of beneficiaries is still considered as the core indicator for adaptation impacts. It should also make efforts to showcase more of the impacts of considering gender in funded climate actions. Likewise, talking about the effectiveness of climate finance in the BA must be much broader than talking about cost effectiveness, how it was handled primarily in the third BA. So there should be a more integrated focus on co-benefits, multiple benefits pursued by climate finance. And if anything, the corona pandemic has highlighted that outcomes related to health, development, resilience of social support systems cannot be separated from climate impacts and climate actions. Next slide, please. The next slide. Thank you. In describing and highlighting effort for climate finance providers for tracking and reporting and impact measuring, the BA, there should be in the upcoming BA, there should be a focus on the inner rings of the onion diagram of climate flows, meaning the focus on the climate funds under the UNFCCC first, followed by dedicated climate funds, because as we know, this is where the level of completeness of climate finance data is the greatest. All of these funds have gender mainstreaming mandates and gender policies, often with time-bound gender action plans with success indicators. Some of the coordination work that is happening between the, for example, the GEF, the Adaptation Fund, and the GCF gender integration efforts could be further strengthened. For example, to see if there could be some joint indicators that would allow aggregation of gender impact measurements across those funds. The UNFCCC funds are also especially important because of their signaling function to the wider climate finance architecture, especially on gender integration, as they work with many of the climate finance providers on the outer layer of this climate finance onion as accredited entities and implementers. The climate funds, the UNFCCC climate funds, also have a mandate under Decision 21 CP22 to include in their respective annual reports to the COP information on the gender integration in all aspects of the work. And if you look at this reporting particularly, I think there is a lot more room for more granularity in detail, also in highlighting some of the fund best practice project or procedures. For example, certain funding approaches are more likely to reach and support women more directly, such as small grants approaches and other forms of devolved financing or targeted private sector support, focusing on increasing access to finance for micro, small, and medium-sized enterprises, with women entrepreneurs disproportionately in the micro and small segments of the private sector. But I think they should also report more transparently on efforts to address persistent reporting gaps. And this could be lifted and included in the BA. Next slide, please. Reporting accuracy starts at home, though, for the UNFCCC Climate Fund, and that includes the way funds present their own project portfolios on the website. And as you can see here for the Adaptation Fund and for the GCF, there is no effort made on the portfolio level presenting gender disaggregations for beneficiaries. Transparency is crucial. So, for example, on project level integration effort, it's not enough to report that a large percentage of projects have gender assessment and project specific gender action plans as they are required to, for example, under the GCF. The existence themselves is not the success, but how they are informing project design and implementation is the issue. And for example, in the GCF, the annual performance report of accredited entities are not yet made public. in the adaptation fund they are. While the GCF annual portfolio report describes that many of the accredited entities did not comply with the Secretariat's request for projects to report against the gender action plans that they initially submitted. This has been a challenge, it's an ongoing challenge, because it also does not allow for outside assessment, including from civil society and affected communities. Lastly, maybe a word on impact measurement. As we heard, results measurement and performance measurement frameworks of climate funds and many multilateral institutions have gendered indicators and demand that at the project level, but they are insufficiently aggregated at portfolio level and reported, as we've seen. It might be useful to also think in terms of suitable proxy indicators, for example, with respect to sectors of financial instruments use that focus on some of the activities and financing actions and climate actions that disproportionately benefit women because of their specific engagement in the climate arena. And those are, for example, a focus on locally devolved, local community focused activities and the share of finance that is directly supporting locally led climate change projects. We know just incidentally that this is relatively low, but it would be great to have more data clarity on that. What percentage of projects or programs have involvement of national women machineries or organizations as executing entity? What percentage of private sector engagement focuses on increasing the access to local financial institutions for patient affordable loans for climate actions, for example, that MSME angle? In terms of indicators on energy access, which are reported against, it should be broken down further to, for example, look at how much of those address energy poverty issues, which disproportionately affect women. And then, for example, indicators on agriculture, there the focus should be on broken down reporting on food security issues and how much, for example, supported services, access services, support services are accessible. And I think all of this would give a much better and much clearer and more transparent indication of how far we have progressed actually in integrating gender in climate finance allocation and provision. Thank you very much.
Thank you, Ms. Szaletek. I think that was already very interesting and a lot of specific issues that will definitely have some discussion later on. Now I will give the floor to Chisuru Aoki from the GEF, just to also talk about the measuring and assessing impact outcomes of climate finance and the reporting on climate proofing and resilience measures. Chisuru, the floor is yours.
Thank you, Vicky. Can you hear me?
Yes, we can.
Excellent. Good morning, good afternoon, and good evening, colleagues. I wanted to spend the next several minutes talking about what we're doing in terms of improving reporting on climate finance impacts and results. Next slide, please. So we've been in this business for quite some time, and this is just to give you some snapshot of the history of monitoring results at the GEF. Basically, we have been making efforts to monitor and track what's so-called the global environmental benefits, which may include greenhouse gas emission reduction points, as well as adaptation benefits, which are more tied to the beneficiaries, as well as hectares under resilient development, and so on and so forth. And we have been doing this at the individual project level, but we also think it's important to report at the portfolio level. So there have been efforts made to do on both accounts. And right now we're in what's called the GEF7 period. And the GEF7 period covering July 2018 to June 2022, we have made efforts to streamline the number of indicators for the GEF Trust Fund to 11, and also really utilize 4 core indicators for the LDCF and SCF. These are the Least Developed Countries Fund and Special Climate Change Fund, which are more focusing on climate change adaptation benefits. And for the GEF Trust Fund, we've also established the targets on the benefits to be delivered over the 4-year period. And we're keeping track of them, as I indicated, at the individual project and also at the portfolio level. Next slide, please. So what are the key features of the GEF-7 results framework? As I indicated, there have been some concerns raised that if you have too many indicators and too complex a results framework, it's difficult for countries as well as project implementers to keep accurate track of them and to actually make meaningful analysis out of them. So what we have done for GEF-7 is really streamline and track fewer and more relevant indicators and have a much more simplified results framework. And that would actually encompass 11 core indicators. Those would include directly climate change relevant ones, and also ones that would be more relevant for 4 core areas the GEF serves as those are relevant for, let's say, chemicals and waste, as well as land related ones. And we agree that GEF-7 targets across the core indicators. So within the 4-year framework, we know what exactly we're aiming for as a fund through multiple projects and programs to deliver and to have impact on the ground. And we have come up with more streamlined monitoring reporting requirements and measures to enhance availability, accessibility, quality, and timeliness of data and information and results by making them more public every 6 months, publicly available by compiling all the information, as well as the continuous capturing of gender results and making sure that information is also made available. Now, I just wanted to highlight one element. This is related to climate risk. Every GF project needs to be screened for climate risk. And we follow the our Science and Technical Advisor Panel guidance on climate risk, which requires a climate risk to be following 4 key steps. One is a hazard identification, has a sensitivity to climate change and its makeup being assessed. And the second one is evaluation of vulnerability and exposure. How will the project be affected by climate risk over the period between 2020 and 2050? And this is more of a long-term vision, and have the impact being addressed adequately. And the third one is risk mitigation. Have there been measures identified, and how are they put into place to address the risks being considered? And how will those risks be dealt with? And the fourth measure is risk management. What technical institutional capacity and information is needed to appropriately manage risk? So just to highlight in terms of the climate vulnerability risk, we are now requiring every single project that GEF supports, regardless of the focus of the project, be it chemicals or be it climate adaptation, be it climate mitigation or land-based actions, every project is now being screened for climate risk. Next slide, please. I'm not going to spend too much time on this slide, but this is just to show that the implementation of results framework does require different players and different actors. The GF agencies certainly have a role to play, and so do the countries. The GF Secretariat, we set the results and we monitor results and report on them, and we also review them. And finally, the GF Independent Evaluation Office, they do the independent assessment of what has actually happened. Have we actually delivered? Has the GEF delivered on the results and impacts that we have set out to do? And have the agencies and countries been able to deliver on those and actually benefit from the impacts that have been said to be delivered on the ground? Next slide, please. Okay, so the GEF in the GEF-7 period, which is 2018 to 2022, we're following 11 core indicators, and these, as I indicated, include the hectares of protected areas, area of land restored, greenhouse gas emissions mitigated, so on and so forth. So let's go to the next slide to show you what exactly we are following for climate change mitigation. The core indicator for GF Trust Fund Results Framework that captures the the climate change mitigation benefits is actually the greenhouse mitigation emissions mitigated or avoided. And we have set a target for the GEF-7 period of 1.5 billion tons of CO2 equivalent. And we're keeping track of carbon sequestered or emissions avoided, and emissions avoided outside the FOLU sector, as well as the energy saved, as well as increase in installed renewable energy capacity per technologies to get a sense of the avoided emissions. Let's go to the next slide. So now let's talk about climate change adaptation. For climate change adaptation, we have two funds under the convention, which are the Least Developed Countries Fund and Special Climate Change Fund. For these two funds, they share 4 core indicators, which are direct beneficiaries, which are gender aggregated, land under climate resilient management, number of policy and plans and development and framework, and then finally, people with enhanced capacity as a result of interventions put on the ground by the LDCF SCCF effort. The numbers I wanted to show here are basically what we have been collecting for the first 2 years of a GF7 period. So these are from the cohort of projects that the council has approved in the first 2 years of GF7. As you can say, we're keeping good track of the gender relevant indicators within the LDCF and SCCF, as well as the GF main trust fund. So that's it from my side. I will be happy to answer any questions or provide further insights. Thank you so much.
Thank you. That's a very interesting presentation. It shows again the importance of indicators as well. And thanks for giving us an update where you stand on that one. The next one to take the floor will be Mr. Vladislav Arnaudov from the Green Climate Fund. You have the floor. Thank you.
Yeah, thank you, Vicky, and good morning, good afternoon, good evening, colleagues, depending on which part of the world you're located. My name is Vladislav Arnaudov, and I'm a climate change monitoring and evaluation specialist with the Green Climate Fund. So I was asked today to talk very briefly about the way the GCF is responding to the COP guidance on tracking and reporting impacts of mitigation and adaptation finance. So I'll just take you through our result architectures, what are the most recent developments on our side, and what is the way forward. So on this slide, you can see the various documents that form the GCF result architecture. And I want to draw your attention to 3 of them. So the first one is the business model framework and result management, which is the second from the top, which establishes, among others, our initial result areas. So the GCF, and I'll show you that on the next slide, has 8 result areas, and all of the projects that we finance have to contribute to them. And later on, we adopted 2 additional documents that establish indicators for these 8 result areas. So these documents are the initial result management framework and the performance management framework. So in these documents, we have a set of core indicators, followed by impact indicators and outcome indicators, which individual projects have to select from. Can you please move to the next slide? Yes, and here you can see the 8 result areas that the GCF has. So on the top are the mitigation result areas, which are related to energy generation and access, transport, buildings, industries, and appliances, as well as forestry and land use. And after that, we have the adaptation result areas covering most vulnerable people and community health, well-being, food and water security, infrastructure and built environment, ecosystems and ecosystem services. So as I mentioned, in each of these result areas, we have a set of indicators from which projects, accredited entities can select, and they have to report against them. The issue that we have faced when we reviewed our portfolio about the first 100 projects that have been approved by the GCF, we are a relatively young institution, was that the reporting against many of these indicators has not been really consistent. And one of the reasons for that has been that we have probably not provided sufficient guidance on that, how exactly we expect the reporting to be conducted in the different result areas and against the different indicators. So we decided to take several steps to streamline the result tracking and the reporting. And the first step was the development of a programming manual for the GCF, and you can move to the next slide. This document has been released just a month ago, and it's available on the GCF website. But what it contains, in addition to a very detailed explanation of the entire programming cycle, is a very clear guidance on how exactly the reporting against each individual indicator has to be done. What are the information that has to be contained there? What are the means of verification? And we even provided a set of good examples and not so good examples based on what we have seen in the existing portfolio. So we hope, and we can see that this is already happening with the new projects that come on board, is that accredited entities will have a more systematic approach and on how to report against the individual indicators, what information to present to us, which will also help the Secretariat to analyze that information and eventually to aggregate it. Another thing that we have done is that we establish a specialized team within the Secretariat, within the Office of Portfolio Management, that works with accredited entities submitting funding proposals, especially on the monitoring and the reporting side. So this also helps accredited entities overcome some of the issues that they may face in setting up the logical frameworks, the targets, the means of verification, and eventually reporting back to us. So the programming manual and the support by the Secretariat, this was the first step. We also did a couple of other things, and that's on the next slide. We analyzed gaps in the GCF portfolio related to result management, and we tried to see to what extent they're related to result management and how we can fix those gaps. So the report is almost ready. We are negotiating at the moment with our board how exactly we should move forward, but the overall goal is to fix and streamline the result reporting in all of our existing projects and make sure that we as a fund report credible results to the whole climate change community. And as part of this, we also have undertaken an analysis, and that's on the mitigation side of the greenhouse gas emissions in our portfolio, and to make sure that the greenhouse gas emissions are reported based on a more consistent approach following approved methodologies, and to make sure that when we report greenhouse gas emission reductions, we are actually talking about the same things. Because one thing that our analysis showed is, due to the fact again that there was insufficient guidance, the projects were taking quite different approaches, which sometimes would even prevent the comparability and even the aggregation of the results related to mitigation. And finally, and this is a new development, which is going to our board meeting in a month from now, is the development of a new integrated results management framework and also result tracking tool. So we have received a number of comments over the past several years that the initial result management framework did not fully reflect new development in the climate change community, the Paris Agreement, the SDGs, because when it was adopted, none of these documents existed. So we came up with a new approach, which put into one place the various documents that were guiding our result management. We also streamlined the indicators that we have. And originally in the adaptation, we were looking at the number of beneficiaries and the mitigation the tons of CO2 equivalent, but we also added to that the avoided losses, as well as improvement of natural resources that lead to emission reductions or improved resilience. And we, in addition to that, we added two more elements to our result management framework, which we believe will help us better manage results and report. And one is inclusion of measurement for systemic change, because we believe that no long-term transformation can occur if there is no systemic change, and we came with a set of indicators at country level that is going to be measured, and this includes indicators related to the diffusion of climate change innovation, institutional regulatory frameworks, also market development and transformation. And we also added measurement of paradigm shift, which is one of the which is the ultimate goal of the funding under the GCF. So this result management framework, as I said, is going to be submitted to the board in its next meeting, and hopefully it is going to be approved, and it will allow us to continue on our journey on better tracking the results of the mitigation and adaptation projects that we support. And before I finish, maybe one more thing that I want to add, and to echo some of the comments that previous speakers made. We are also working with other sister climate funds, including the GEF, the Adaptation Fund, the SCIFs, as well as the NAMO facility, and exchanging information on result management so that we learn from each other's best practices, and also try to improve over time the way we track and report results. So that is all from me, and I'll be happy to answer any questions that you may have. Thank you.
Thank you. Thank you for providing your view on the reporting on impacts and outcomes. I think that was as well very interesting to hear. The next is Mr. John Harding from Cruise, and he will provide some insights on the climate resilience and climate finance role. So, Mr. Harding, you have the floor.
Thank you, Chair. I'll be quick, as the climate risk early warning systems Cruise is a relatively recent climate finance mechanism, and it's probably one of the smallest and very specialized structure. But we're also a financial intermediary fund managed by the World Bank, similar to the other two interventions. We also have a board that oversees our work, and we engage with countries through implementing partners. And in our case, it's a very small number of very specialized implementing partners. And we have a scale of financing of approximately $100 million. So in line with the discussion today, and basically on how do we incorporate climate proofing and climate resilience into our portfolio programs, basically the services that we provide, with the capacities that we develop with the countries we work in, are basically early warning systems. So as you can imagine, these are very much directly related to the adaptation agenda, but also climate resilience. And it will also come as no surprise to you that, similar to the other interventions, the notion of climate proofing and climate resilience is very important to our constituents, and in particular the financial partners, and they want to see clearly how we contribute or not to these agendas. So how did we go about developing our approach to measuring resilience in our portfolio? So first, I think, and this is the most important, we decided very early on, with the blessing of our board, that we would not develop our own climate resilience framework in a way, which is linked to our portfolio of projects. It seems that every new initiative really always feels the need to develop their own definitions of resilience related to M&E schemes and indicators. So what we did is that we aligned our M&E results-based management system to existing commitments that countries have made regarding how they measure their climate resilience through global agreements. So and if we can have the next slide, which is my only slide, I don't need to tell this audience that obviously we currently don't have a standard way of measuring loss and damage to climate change. It's technically very challenging, it's politically difficult, but countries have committed to measure loss and damage to extreme climate events, which in a way is a subset of climate change impacts. And it's a subset that's directly relevant to the effectiveness of climate resilience, and in our case, the early warning systems that we're developing. And specifically in 2015, the member states, they successfully aligned these metrics across the SDGs and other global frameworks like the Sendai framework for disaster risk reduction. And hopefully, similar metrics will be included in the modalities to monitor the Paris Agreement. So for our result-based management system, our highest level outcome is basically how effectively did we contribute to reducing economic and life loss to climate extreme events. And that is, of course, an SDG target, which is linked to the first goal on poverty. And it's also an Sendai framework target. And one level down from that is the need to increase the availability and access to early warning systems. So that is also a global target that countries have agreed to measure in 2015. So in a way, we require the countries to effectively measure the effectiveness of their national climate resilience systems in a way, linked to these global agreements, for us to demonstrate the efficiency of our portfolio of projects in that country. So having said that, as you can imagine, the fact is that we work in a number of fragile countries. So while there's a strong rationale for working in these countries, these are the countries, if you look at the top 30 fragile states, they account for 58% of deaths to climate extreme events. It does become problematic when they don't have the capacity to report on these global goals and targets. And actually, if we look at how many countries are reporting, last year it's only 23% of the LDCs and only 3% of the small island developing states currently report on those specific targets of the SDGs and the Sendai targets, and picking on early warning. So that obviously was problematic for our approach. And another challenge we faced was the fact that when we're measuring early warning capacity, it's not always standardized. So the Green Climate Fund, the colleague who was just speaking, the World Bank, other development partners, they're all, as part of their M&E systems, they're all committing to increase access to early warning systems by so much by this year. But we don't actually have a standard way to measure this. So what we've done is we initiated this year actually a capacity building program. So first of all, to build in least developed countries and SIDS the capacity to monitor their relevant resilience global goals and targets as they relate to the national context. And at the same time, to harmonize now how we measure these metrics across different institutions and initiatives. And actually right now this afternoon, WMO with 16 partners is launching the first report on the state of climate services, which has a focus on early warning. And what we're hoping is that this is really going to set a baseline for us collectively on how we measure this. And I would like, by 2020, we're hoping that through this capacity building and this alignment of our metrics with these global targets, we'll be able to show how our investments contribute to the resilience and climate proofing of the countries where we're currently working. So that's basically, in a nutshell, our experience and approach we wanted to share with this body. It's the first time we speak to this body. As I say, we're one of the smallest partners, but we hope that our experience also contributes to these discussions. And you can get more information on our website, and of course, happy to answer any questions here or either bilaterally. Thank you.
Thank you, Mr. Harding. And I can already see that somebody raised his hand, but we will keep a discussion after all presentations have been given. So I'm first going to give the floor to two remaining presenters, which first of all is, both of them are on country-level tracking of impact. And the first one is Mr. Peter Odego from Kenya National Treasury. Mr. Odego, you have the floor. Thank you. Is Mr. Odego present, or we might just first give the floor to our colleagues from the UK, just to make sure that we may benefit from all the time that we have.
Yes, Vicky, he was present earlier, but he may have dropped off, so we can go to the UK first.
Okay, so then I will give the floor to Amanda Penniston and Adam Kitson from the Department for Business, Energy and Industrial Strategy from the UK. So Amanda or Adam, you have the floor.
Hi everyone, thank you. We've actually got some slides, but they're not part of the presentation here, so I was wondering if we could take over the screen, please. Thanks. Okay, so we're gonna I'm gonna cover the country level reporting side of things, and then Amanda's going to talk about the results. So I'm going to talk about how we track our finance down to individual country levels and how we report that. I think a couple of key points I want to just to highlight is that it is challenging to do it accurately and robustly. I think we're keen to be transparent as possible, but also noting that it's a challenging area and that our approach is evolving over time. So I think where there's clear, where a program is clearly located in a specific country, for example, if it's been developed through one of the UK's overseas country offices, or it's specifically targeted at an individual country, then we're able to report that. Where we know that a program is targeting a particular number of countries, but we don't know what the actual specific spend in those countries are, then we do try and list those countries. So we've highlighted our most recent external reporting, which was what we've done through an EU regulation.
Sorry, so Adam, could you just adjust your camera so we can see your face?
Move back.
Thank you very much. Okay, thank you.
Okay, so yeah, I was just highlighting our most recent external report. So obviously we have to report biannually to the UNFCCC, but we have been reporting annually to the EU. So at the end of September this year, we published our 2019 annual climate finance figures, and that uses the same common tabular format that I think colleagues will probably be familiar with for UNFCCC reporting. And we do try and list the countries that we're targeting. However, what we can't do is tell you how much spend the UK has provided to those countries within that programme. And that's for a number of reasons, so I'll talk about in the challenges section. So that's kind of how we try and report it. As I mentioned at the start, there's a lot of challenges. Often our finance is pooled with other donor finance, so we often provide our money to either a multilateral fund or a multilateral development bank managed program. So the point at where the money leaves the UK, it's going into that kind of higher level recipient rather than the actual specific country. So it's further on down the delivery chain that our spend is actually going into specific countries. And we're also keen to align how we report our climate finance with also how we do our reporting for overseas development assistance, for example. So the reporting we do to the OECD DAC, which again, we're tracking the point at which the money leaves the UK rather than the point it reaches a specific recipient country. So there's some challenges. I mean, it is evolving. I mean, we try and do a bit more internal analysis, looking at, for example, with some of the multilateral funds, we know what our donor share is, and we can sort of sometimes apply that donor share to what we know a specific country is receiving through that fund. But that's generally for our internal analysis, and it's because it's kind of a lot of it's estimated using a methodology. We don't tend to use that approach for external level reporting. So I'll pause there and I'll pass on to Amanda to talk about how we measure some of the impacts of what we do. Thank you.
Thank you. So I've just got a few slides to talk to our results framework, which is how we measure our impacts. So we collect yearly results across the UK climate finance portfolio, which we call ICF, International Climate Finance, using key performance indicators. We collect data on both what's been achieved and what are the expected lifetime results of each programme. And we aim to have each programme reporting against at least one of our key performance indicators. This is a list of the set of key performance indicators, and the ones highlighted in yellow are the ones that we aim to aggregate and publish each year. So as I had mentioned, especially on the adaptation and resilience side, it's concentrating on the number of people, the number of beneficiaries, and greenhouse gas emissions are in there too. But we also include a transformational change key performance indicator, although we're currently unable to aggregate it up to the level of the whole portfolio. So this is done at programme level. This is just a quick illustration of the results collection process. So we have a number of different programmes across different government departments in the UK. And so the results are collected by a programme and quality assured, and then aggregated across the whole of the climate finance portfolio, and then published each summer. There's kind of 4 key uses to the results. We use them to communicate, to sort of show people what we've achieved so far. A key part is the monitoring and the reporting, so that we can know whether our programmes are delivering what we thought they would. There's learning, which is really important to make sure that we're learning from things that have gone well and things that haven't gone so well. And there's transparency and accountability to make sure that the UK government is held accountable for its spending. And this is just a summary of the most recent results. So for instance, 66 million people were supported to cope with the effects of climate change through the UK's climate finance. So thank you very much for listening.
Well, thank you both, Adam and Amanda, for giving a view from the UK perspective on how you do the country level tracking. Is Mr. Orengo back online? I haven't seen his name, so I'm afraid that we've lost him. Heather, can you confirm?
Yes, he hasn't come back on yet. We've reached out to him to try to reconnect him, but he hasn't come back on yet. So perhaps we can go straight to the discussion, and if he comes back on, we can give him the floor.
Yes, that's exactly my plan as well. So thank you all for giving such substantial presentations. I've already noted some interesting things down. I mean, just going through them, probably you might know, I mean, not highlighting everything, but I think the request on indicators and the gender disaggregated data, the joint indicators on gender, and having the UNFCCC funds having a role as signaling to the other climate funds, I thought that was already quite interesting. As well as for the GEF and the GCF, what you mentioned about the portfolio level and how that is important next to the country individual level, but also the risk of having too many indicators and not have which makes it more difficult then to have actually purposeful indicators. And the way you do the climate risk screening, I thought that was also something to further look into. The importance of guidance, I fully understand that one, as well as result management. And then we also had the alignment with the existing systems, which came from John Harding, as well as the need to have the capacity to report on the targets and the current lack of standardization across the institutions. I thought those were also quite interesting things. And then finally, by the UK, the mentioning of how the challenge between the attribution to individual countries and of course the importance again of results framework were quite some key issues, as well as finally that the results could actually have different purposes and that should be taken into account. So just to give you very briefly, because we've kept quite well on time, and I'm going to give the floor so you can start raising your hands, and some colleague is already quite keen on intervening. So just make sure, we have at this point 40 presenters, which means about 1 minute per person if everybody's going to talk, which I assume won't be the case, but just to make sure that you be concise and very to the point of your question or your intervention. So I'm going to give the floor to the first colleague, which you mentioned in the chat list or in the participants list as a Federal Ministry of Environment. I'm not sure without a name, so I don't know if you want to take the floor. Or maybe your hand is raised by mistake.
I think the name is Adesola Efiwat.
I can't see that. So yes, Adesola Efiwat, you have the floor.
Hello?
Hello,
yes,
yes.
we can hear you.
Okay. Sorry, I lost it for a moment. I just heard my name. Hello?
Yes, you have your hand raised for a question.
Please, can you come again, please?
You have your hand raised if you wish to raise a question in the webinar.
Oh, okay. I'm sorry. It must have been a mistake.
Okay.
Yes, I have questions, but not at the moment.
Okay.
Thank you.
Okay. So then I would open the floor for other colleagues who wants to bite up the first question. Well, if there are no first questions, maybe I can try to ask some myself. Which, I mean, I see somebody. Hugh Seeley, you have the floor. And maybe just give a short introduction of who you are, just the organization or what you're working for. Thank you.
Governor Barbados, thank you very much for the webinar, and thank you very much to the presenters. My question is basically how I'm looking at it. I'm looking at this in the context that climate finance is failing because we're not meeting our goals in terms of mitigation or adaptation. So in that overall context, recognizing that climate finance is not achieving the transformation that we wanted to achieve, I find that the indicators that we're using are looking at how good the existing climate finance is. And I'm just wondering if there could be another impact metric, or how do we determine the lack of scale, and how additional or incremental climate finance would have an impact. So you're not only looking at the impact of the climate finance that's occurring now, you're looking at, okay, but if I gave more, how incremental an impact would I have? Because I have a funny feeling that we're missing out on the scale issue. Thanks.
Thank you. Thank you for asking your first question. I don't think there's only one question coming out of these presentations and the topics. I really would welcome at least two more questions before we can start a discussion around it. Just to open up the question a bit from our colleague from the Barbados, if we would see what's the purpose of measuring the outcomes and the impact of climate finance? He mentioned the importance of making sure that we have the scale to assess if we are at scale of what is necessary for mitigation and adaptation. I think what the UK example also showed is how important it sometimes is to have this accountability, but also this learning experience. So I don't know, and are actually all those indicators fit for those purposes? Because that will be something that I have as a question, like how do we make sure that the indicators are in place that actually respond to what we are asking for, and especially because there is such a high diversity of purposes that we would give to assessing or monitoring the impact of climate finance. I'm not sure if colleagues who made the presentation or our consultants from the biennial assessment has some insights in providing these views. But again, I want to stress that this webinar is really to get your insights. So hopefully we can get some more input. Yep. So yes, Mr. Arnaudov, if you want to take the floor, go ahead. Thank you.
Yeah, this is Vladislav from the GCF. I don't know, maybe until other colleagues are ready with their questions, I can just very briefly respond back to the question from Husili. Okay, so as I mentioned in my presentation, we are currently working on the new integrated result management framework, and we are trying not to measure only the number of beneficiaries under adaptation and the tons of CO2 reduced under mitigation, but we are also looking at systemic change. So has institutional capacity been built? Is there a diffusion of climate change innovation? Is there market development and transformation? Is there knowledge generation and learning? So these are also things we are trying to measure at project level and also at country level. And then we are looking at paradigm shift potential of projects. And when you look at that, we're basically focusing on 3 different dimensions. And these dimensions include depth, sustainability, and scale. So we are trying to find an answer to what extent the investment that we are making, they're scalable, whether additional support would actually help deepening the climate innovation and its spread across the country. So this is one area that we are actually looking at in our new result management framework. So this is probably one way I can respond to your question. Thank you.
Thank you. Lian, you also want to respond to the question?
Yeah, thank you very much for the opportunity to come in here again. And also thank you very much to Governor Seeley and the question on the lack of scale and whether additional climate finance will change or what impact it has. So first of all, it obviously is a matter of scale. We know that we do not have sufficient climate finance raised and provided. And that the needs are obviously much larger, which I think then puts the focus that much more on the need for accountability and transparency, exactly on how the finance that is available is provided, and particularly is provided in a way that deals with question of equity, fairness, providing support to the most vulnerable, and this is obviously countries, and SIDS are obviously very vulnerable countries, but also the most vulnerable population groups within the countries, where, for example, the gender consideration as one of the elements comes in, but not exclusively. And I think so it's important to think about whether it's a matter of spending the finance that we have on one way better, and there are obviously huge almost philosophical differences between those that probably think that leveraging using public money to leverage private finance is the best and most effective way of spending it, versus those, and I would belong into the second group that are saying it's much more needed to focus on providing finances in a way that provides multiple benefits, that is focusing on climate, but not just on climate, also on development, economic, gender, human rights, local indigenous peoples' knowledge, support, and so on and so forth. So I think it's a broader question about whether the indicators, for example, of effectiveness that we have right now are the right ones, whether we need to refocus on some of them, and also what kind of financing instruments are necessary in order to make sure that some of that core funding that should be provided to deal with equity, fairness, and effectiveness issues is available. Thank you.
Thank you. That's very helpful. Mr. Harding, followed by Mrs. Aoki.
Yes, thanks for the question. It's been a while since I was participating in one of these.
I'm sorry, wait, Mr. John, the noise is very badly.
Is it bad now?
It's an echo. I mean, at least for me. I don't know for other colleagues.
Is it any better now?
No, unfortunately not.
Maybe let someone else come and connect again.
Okay. So yes, and I'll give the floor first to our thank you.
Yeah, thank you, Madam Facilitator. A couple points I wanted to raise, and probably, somewhat similar to what my other fellow presenters already mentioned. Look, the resources that these public multilateral funds are entrusted to address the climate change as is, obviously is very, very small in comparison to the actual needs on the ground. So one of the things all the funds are keeping track is obviously the indicative co-financing, how much resources that other players, particularly the private sector entities, as well as domestic resources are being mobilized. Another one is investments being mobilized. Another one is what kinds of different financial instruments above and beyond the grant financing, such as loans, equity, and so on and so forth, that are being mobilized as a result of the grant financing that's being provided through the GEF Adaptation Fund and other types of public multilateral resources. I think another one that I would like to know perhaps in the next BA is how do we account for the closing of the finance gap by removing the perverse incentives, and how do you basically make the causal linkage, if you will, between the policy measures that the funds are supporting and the removal of perverse incentives? And I guess if we can go one step further to say, then how do you keep track of those perverse incentive money that's being freed up, being used for climate change purposes more broadly and more positively? So those are the things that we would like to really understand better. Thank you.
Thank you, and thanks for the very concrete questions, which is also always helpful for our consultants as well. John, will we try again?
It's sounding better this time.
Sorry, it's not getting better. Maybe we can you can use the chat instead of talking. I'm sorry, but it just.
No problem at all. Of course, I'll provide my comments on the track.
Thank you so much. Okay. So I mean, we've heard further views from our presenters, which is the whole about the effective indicators of effectiveness. The first, to first also focus on specific elements which are very crucial on climate change, which are the most vulnerable, and the accountability, but then also the importance of having the other co-financing, private mobilized, domestic, and the other financial instruments. I'm not sure if anybody wants to further have a question around this, or just like share your views or insights on how you, as representative or stakeholder from your organization, provide the tracking exercise. You could also use the chat to put questions in there. We will try to keep an eye on it. Yes, go ahead. Charlene, go ahead.
Hi, Vicky. Apologies, I was not able to raise my hand. I just wanted to thank everyone for the presentations, and also encourage people listening that if they do have good case studies from which we can that we can feature in the fourth BA, and from which we can try to extract either best practice examples or the conditions that enabled certain things to be put in place, that would be really welcomed. So, for example, in strengthening national institutional capacities, or how particular countries are measuring impact. In addition to which, it would be really interesting to understand from the kind of the contributors and the funds on the call today, how they're using some of the impact measures to inform future programming. So if there are any really good examples that might be worth featuring as case studies, that's another way that we can try to build kind of progress across the subsequent BAs, and I would welcome that. Thanks very much.
Thank you. I saw that John tried to get back in. So John, do you want to give a final shot to see if you can intervene?
Can you hear me better this time?
Perfect. Go ahead.
But unfortunately, I didn't hear. I was just connecting as the last question got asked. So I'm still on the previous question. So I don't know how you want to manage that, because I didn't. I was just connecting again while the question was being asked.
No, go ahead, John. We're waiting to see what you want to say.
Yeah, and I wanted to come back to the comment made by the colleague from Barbados on this notion of transformability, and scale, and how how do we risk, not or fail, as using his terms, failing in achieving the right level of engagement through these climate financing mechanisms. And I was trying to translate that into our sort of daily reality of both on how we program the resources and how we try and demonstrate the effectiveness of our engagement. And one of the challenges we have, and it may be related to institutions we work, but obviously we work with institutions which that have, let's say, limited capacity. Typically, we will, in the case of the work we do, we'll be working in countries with the national meteorological services, for example. And this notion of delivering to scale with these are institutions where, in the context of some of the countries we work, their typical annual turnover will be 1.5 to 2 million US dollars equivalent. And we come in with approximately 5 million of financing to help build up their capacity, and typically will align with a larger financing window of another Green Climate Fund or the GEF, which could be up to 20 million, 25 million. For these institutions, these are quite challenging, amounts of money to absorb in the context of their daily functioning. So in a way, before we reach a sort of this notion of transformability, we're really looking at building the capacity of those institutions to ensure the effectiveness of the uses. And for us, one of the biggest challenges on a daily basis is not transformation, and I know it's the words that are used a lot in these kind of forums, but it's the notion of sustainability, beyond the engagement of the climate finance institutions, and in a way we've put more emphasis on measuring the sustainability dimension of our engagements rather than the transformation side, and that has been quite well received by our board members, in saying that any engagement that we have, how is it actually going to build that capacity to sustain those services that we're building up with our national partners in the longer run.
Apologies, I forgot to unmute myself. So thank you. Mr. Federico Massa, you're the next to have the floor.
Yes, thank you, Vicky, and good afternoon, everybody. Thanks a lot for the great presentations that were given today. Well, I'm a senior analyst from Climate Policy Initiative based in London. I just wanted to make a small comment about the presentation that Mr. Peter Odengo would have given about climate finance tracking in Kenya. We at CPI have been working closely with the Climate Finance Unit at the National Treasury of Kenya for the past couple of years in the context of the GNI Plus consortium that CPI is leading with ACOM and Pollination. And I know that it's a pity we couldn't hear the intervention from Mr. Odengo, because Kenya has been working for many years on tracking domestic climate finance. as well as creating a system to track their own expenditures and also keep track of the international ones through the central accounting system that is being used in Kenya, IFMIS. So Mr. Odengo would have given an update on that, on the status of implementing this climate finance tracking system. On my side, I can tell you all that as part of this collaboration with the Treasury of Kenya, we will be releasing a report, actually a Government of Kenya report that the GNI Plus consortium has contributed to, which tracks climate finance in Kenya in the fiscal year 2017 and 18, and which is going to be called Landscape of Climate Finance in Kenya, that will be released between November and January. Publication date is still not confirmed. This very much builds upon some past work that have been done in Kenya, like the CPBR that have been released, I think, in 2016, and very much brings forward the current knowledge in Kenya about climate finance tracking. So I just wanted to give everyone a head up about our plan. Thank you.
Thank you. Thank you very much. This is exactly the kind of examples that are very helpful for our team to work further on. So this, I mean, the more we have from best practice examples, the better, or new updates on data that becomes available. Governor Rasili, you're asking the floor as well. The floor is yours.
Thank you very much for allowing me to come back a second time. I wanted to thank the presenters for responding to my question in such a reasoned manner. John, when he finally got in, was indicating that his objective is more sustainability than transformation, and I respect that, and that's logical. But we are in a climate crisis, and there's a sense of urgency that we need to have. So transformation, yes, is absolutely necessary. And my question on scale was, and forgive me, I'm an engineer, so I tend to think in those terms. If I need a sufficient amount of force to move a sitting train, and I have to be able to get that train moving, it doesn't matter how many small interventions I make, if they're ad hoc and uncoordinated, if they're not sufficient force to move the train. And perhaps that's what I'm getting at, that we either need a discussion on additional finance, or perhaps then better focus and coordination of the finance that we do have from our development partners, and perhaps some more programmatic approaches. I call it more a rifle approach than a shotgun. Perhaps that's not politically correct, but I hope that you get my analogy. Focus then on what's required. I always say that one of the best examples of ODA in our region is perhaps what Germany does through GIZ by having perhaps a semi-permanent presence in Grenada when I was there for 10 years. So I understand the limitations of the finance that the institutions have, but I do suspect that there's a level of inefficiency in the ad hoc way in which these interventions are made. And I stick to my point that if we, and I'm not a development economist, but if there's a threshold that needs to be met to get that train moving, then all the interventions below that threshold will be ineffective. Thank you so much for allowing me to come back a second time.
Thank you. You're welcome as well to come back on this issue. We're almost, we are almost running out of time. So I was wondering if there are further interventions or best examples. If not, I would start the wrapping up of today's webinars. But as said, we will have 2 more webinars, and just as this one with a specific goal, just to advise. Final call for interventions. Okay. So then, first of all, let me thank all participants for engaging in this discussion, and especially our presenters for providing their input. And as already mentioned by Charlene, we are looking forward to having further information on your perspective, and also we will try to take this into consideration while we move forward with the development of the report. We also encourage you that if you have further that you engage with us in the development of this report. So any further information or data that might be crucial. So for instance, if you do have some best examples that you wish to share, feel free to do so. I mean, this is very helpful to ensure that we have a report that will actually provide all necessary data and hopefully an even more complete view than in previous versions. So you can do this by answering to the call for evidence, or you can also contact the Secretariat by sending this information. If our the SCF co-chairs on this call, I was wondering if they want to intervene. If not, I would actually we were managed very well on time at least, so this is a good thing for those who are actually already quite late or still quite early in the morning. So thank you again, and we look forward to your continued support and participation. Thank you. Goodbye.